Okay, I don't know how long this video is going to be now because I've just spent an hour and 10 minutes recording a video and I hit a button, the shortcut key, which was going to be a ninja one. However, it was the video one and it canceled my video without saving it. So I just lost an hour and 10 minute of video. So this video might be narrowed down a little bit. But what I'm trying to do is I am trying to go over the settings on here, and there's a lot of them because a couple of people have been asking questions, and I figured it's just a lot easier to do the video. So I'm going to try to do this lickety split. Right now, what I have done is I have put on my reversal bars because I like those. I can explain that maybe later when we get to it. I also have the volume indicator on here. This is not part of the strategy. Um, but I'm thinking of putting it in there because I've noticed, especially with NASDAQ, when it gets into, I'll just go to it real quick, when it gets into the high numbers, um, when it gets like 20,000 or something like that, it just goes too fast. It gets crazy. It's all wacky and it's kind of untradeable unless you're, manually you could trade it, I suppose. But it does something differently. So I'm thinking about incorporating this into the strategy, and that's why all these individual components have all started this way. So this is an individual. You could actually download it if you want to play with it. It's set. I have it defaulted set for a 15-minute time change, time frame bar. If you switched it to a daily, you would just get your daily volume. Simple as that. Just show you the daily volume down there if you want to see that, or if you want it somewhere else, it's fine. But I want to see just a sliver, hence the word volume sliver. And so I'm looking at a 15-minute bar, and if it's under 400, then give me a red, and if it's over if it's over 999 or basically 10,000, then give me the red also. And anything in that range, then I'm good to go within the range, and you can give me a green. Technically, it's chartreuse because I want to stay away from the bar colors, but needless to say, it's a green. So, so what I want to do is by putting that into the strategy that if these numbers get out of whack, it just won't take a trade. But as I say, you can play with it and download it. You could change the time frames if you want to and put whatever time frame you want in there. What the lucky number is, I don't know. I've seen when it starts to get to 20, 30,000, it just goes too squirrely. It's just untradeable for me anyway. Now 400, my daughter trades at night. So I have, when it gets under 400, like right now, it's at I'm on market replay, but it's at 341. It's at whatever time it is in the morning. So do you really want to trade when there's no volume? And so 400 seems to be a good number. Now keep in mind, on a 15-minute bar, every 15 minutes, you're going to start at 0. So at the beginning of every bar, you're going to be at 0. And it's going to take X amount of time, depending on time of day, to get up to 400 to give you a green again. So which isn't so bad because a brand new bar doesn't really mean it's a trend trade. It just means that it just went one more tick in place of, just went one more second or one more tick past the bar. And it certainly doesn't mean it's a trend trade. So, but it just gives you an idea of volume. So anyway, enough said on that. So let me go through these settings here real quick, and I'm going to try to keep this to a minimum because I've just spent way too much time on it. So this is version 128 of the TREMPER Trader. These are higher time frames. Right now, you notice I'm on a 5-1 chart because I like looking at the 5-1 chart because it's price action, and everything I'm going to be using has got nothing to do with the 5-1 chart. Even that reversal bar you saw was based on a higher time frame chart. So, but these are all higher time frame charts. So basically, by having nothing checked here, it's just going to be whatever this primary chart is. That's it. It's going to go green, it's going to go red, and because it's a fast chart, it's going to have a lot of greens and a lot of reds. So in order to slow it down, you got to sync it with some higher time frame charts. This then the exclusions is actually I've only got 2 in here right now, but I've got a whole boatload more that are going to be coming in here. We're constantly adding. This one is the orientation of the moving averages. If whatever you have your moving average, there's 3 options for moving averages, and the orientation is going to be for number 1 and number 2 EMA, meaning that number 1 has to be in front of number 2. Number 1 typically will be a smaller, so let's say it's a 10 EMA, and number 2 is a 20 EMA. Well, in order to go long, the 10's got to be above the 20, and vice versa. If you have the orientation on. If you don't have the orientation on, it means nothing to the automatic strategy. The only thing it means is that you could see it plot on the screen if you have it plotting. But as far as the, it's not going to do anything. Only this will require a certain thing for the strategy itself. And the EMAs themselves are right down here. Now you notice I have them on transparent. There's 3 of them. I have them on transparent because of the fact that I don't want to see them right now, because right now I'm doing, we're just trying to kind of get some ideas on the zones. But typically on the default, they're going to be chartreuse again in red. This one's 20, 55, and this one's a 165. And now this one is a little different. You could change it. So these are the 2 that we'll talk about the orientation. If you want to add this into the orientation, then you would hit enable it. And I probably should say enable orientation or something like that. But in any event, enable this. And then that way now all 3 have to be in sync in order for it to take a trade. The manual mode, it doesn't matter. But in automatic mode, it needs all 3 now would have to be in sync. Whether or not they're transparent or not, behind the scenes, they're still working. Now, if you want to see them, you could change the colors on there and make them pretty. But as long as, but we don't have orientation, so in this case, it doesn't affect us at all. And I don't want this one added into the group, but I might later. So also with this is the only one that you could change it. So let's say you have this chart, which happens to be this 5-1 fast chart. I have a 20 and a 55, but I don't want to see it on here. I want to see a 15-minute chart. So I would just, well, these are for wrangles, don't need those. The value typically is the 14. And let's say I want to do a 15-minute chart, period. So that's basic. So now this 3rd one, and again, of course, to see it, you'd have to put some colors in there. But to, this 3rd chart then would be as a 15-minute. So if you did turn on the orientation up above 2.1, then you would have to have the 20 above the 55 and the 55 above the 15-minute. So anyway, that's what you got to do. So let me go back to my Ninja because I like that so much. And this is going to be, what was it, 21, I think I had said. I don't even know. That was 160. Whatever. Doesn't really matter. 165. There we go. Okay, but they're transparent right now anyway. So that's the orientation. So the next one is the spread, and this is regarding the EMA spread. So this is what we have found out, that on EMA 1 and 2, in this case 20 and 55, when they get really tight, then things start to get a little choppy. And this will prevent it from taking trades in the auto mode. You can do what you want manually, but this will prevent it from taking trades in the automatic mode. And I can't do 0. I'm working on some code and changing that right now. But 1 is the closest that we can get to turn it off right now. So I'm trying to turn it off for other reasons. But in any event, I think the default is 5. So we want to have a little spread there. We need to have some sort of direction. And 5 is enough. I mean, you can make it 10, 20, whatever it might be. And the same thing on the other end. I'm going to turn it down. I have them on. Basically, this is off because there is no on-off switch. So it's basically, I want to make that 0 and, 99999. So, but if you wanted to say, hey, it's going to get, if that spread of those 2 moving averages get way out of whack of, say 50, it's just too overbought. And do you really want to take any more trades at that point? So in this case, I'm going to turn it off. I'm trying to stay away from whites and blacks for defaults, but I notice here this is white because people have white screens and black screens. So if you've got a white screen, you're probably not going to see it at all unless you change the color on that. Okay, so group 4. Now there's going to be more group 2s are coming. There's a lot more coming. Group 3 is saved for the future. Had it in there. It's coming out. We'll be adding that later if it's a future one. Group 4 is all audibles. Now, if you, of course, I've turned those off right now. These are just when EMA 1 and EMA 2 cross each other. You could have the audible. If you don't have this wave file, I can give it to you. But if you have those on, anytime they cross, that you'll hear bullish or bearish, whatever it might be. But because I'm on market replay, it kind of drives me nuts because I do 1,000,000 times speed. So if you do want to hear an audible, if you do have the alerts on and you want an audible on too, then you can. Because that's sometimes nice if you're not paying attention, if you're doing some work, checking emails, yada, yada, yada. You got it going, and then you hear an alert, and then pop up. Anyway, the most important thing is actually 5 here. So background colors are good. I like those. Now, the early trend Q, that's kind of a name we came up with as far as the QU, that things are starting to weaken up. If you notice that, as we talked about too, with our different time frames, there's multiple moving averages in each one of these higher time frames. And when the faster moving averages start to turn, then that is what's called an early trend Q, and it'll turn pink or mint. I call it mint, but technically it's a light green. And you'll see it here in the colors. But basically what that is still green, and mint is, the light green is green, and the pink is still red. However, it's just not as pink, not as red, and not as green. It's still valid. Now, I have one person who said that he was colorblind, it was hard to see, so I just turn it off, and you'll just get red or green, because it is still red and green. It's just a lighter color that tells you, hey, there's some warnings, and you can actually see the warnings plot. We just talked about those on the alerts, the audible alerts, but plot down at 6 is the actual visual alert on it, and you could turn them on too. But I kind of like the early trend Q. The entry zone itself, I'm going to turn that to 0 right now for what I'm doing in my purposes. There's no offset. I don't want to move it around. I just basically, when things set up, boom, show me a zone. And we'll get into changing that later. The height of the zone. Now again, for a computer, a Ninja, it needs a price. It needs a target. It needs to have a stop. It needs to have, it has to be to the tick. Well, in my experience is that there really is no tick. It's a zone. So, a supply zone, or a demand zone, or, resistance zone, that kind of thing. And the same thing goes for this entry zone. It's a zone. So the question is, how big do you want it? And it's going to go by ticks as far as your height. Vertical, it says vertical. So right now I have it set for 2, which gives me a little zone to look at. I had it set for 4, but I thought that was, starting to get too big and too fat. So I kind of narrowed it down a little bit. But, again, you need to play with that, because if you, depending on the market that you're trading, if it's, wiggling around a little bit, you might need that, have a fatter zone. In any event, I have it set for 2. We'll go with that one. The same thing goes with length of this zone. Now, if you're using a smaller chart, you would want a smaller, or you would want a longer length, because you want it to kind of hang around a little bit. You don't want just a few bars and it's gone. It's like, oh my gosh. So for my testing scenario that I'm getting to, I'm just going to put it on 10 right now. But, based on a 5-1 chart, I have it set for 24. But that might be too long to be hanging around for. So we'll take a look at it. And this is the higher time frame. Now, obviously, I don't have any higher time frames on, but if I did have higher time frames on, it would plot that higher time frame for me. Now, in this case, again, you could change the length on that, and that's what this one does. I don't have it plotting, if you notice. One, I don't have any, I'm not synced with any anyway, but if I were, it doesn't do anything other than just give you a, kind of, hey, it's there. For automatic strategy, it does absolutely nothing. It doesn't take into account moving averages. It doesn't take into account anything. It's just showing you, hey, the higher time frame moved on this chart, and if you, for what it's worth, there it is. I don't want to see it, so I don't have it there right now. I do use it for testing, don't get me wrong, but right now I'm not using it. And then depending on the length, being a slower time frame, or it's a bigger time frame, you might want it to go a little longer. Because otherwise it just goes away too fast. So that's that. The entry zone colors, obviously blue is for longs and red or magenta is for shorts. And then the opacity is the, how fat, how thick do you want the bar, meaning the brightness. I usually have it default. I think it's defaulted to 40, but because of my testing that we'll be getting here to in a second, I beeped it up to 80 because I want to be able to see a little easier. Okay, so we already talked about the moving time for, the EMAs. Right now I don't have any on. I don't want to see them because I'm not using them. I'm not using the spread.
So that's off as best I can do without having a zero. Talked about that one. So here's our alert plots. So this is kind of goes hand in hand with the audibles. I guess they probably should have gone together, but I could probably move them around later. But in any event, so group one, which is your primary chart, whatever that might be. In this case, it's 5-1. When things go up, it's going to turn blue, and they're going to go down, etc. And when they, if I turn this on right now, when the weaker ones, now in this case, I'm going to see it on the early trend Q, but when they do switch and say reversal warning, then you're going to see it of display saying, you know, G1 reversal warning. And if you had the alert sent off of that, it would bing for you too. But I don't want to see that one. I don't need to see it on this chart. I'm always looking for the higher time frames. And since I'm you know, if I'm going to sync to something else on a higher time, lately I've been doing like 4 and 3 because the NASDAQ, I need those higher time frames, 4, 3, and sometimes 5. I like to see it. But for right now, I'm just going to turn off all those alerts. You can turn them on, play with those as you wish. The very last setting here, though, after the 5th group, is the reversible distance from the bar. So basically, if you wanted to type, you know, it's going to be like in this one here, it's 16 points Arial, it's bold, it's, you know, it's a higher time frame, it's going to say reversal, it's going to say it like right here under the bars. If you want it down here or up there, depending, then you can just make that a little bigger. That's all that one does. It's just cosmetics. So now we get to the nuts and bolts of it. Entry trigger, probably one of the most important things. Entry trigger is going to be based on the prior bar in the manual mode. So you have to have some sort of trigger for a strategy to trigger. And that trigger is what we call the entry zone. And that, or not the entry zone, the entry trigger. And the entry trigger is X ticks, in this case 10, X ticks from the prior bar. Now I had it at 10 because I was using a higher time frame chart. I would never get it here because this is a 5-10 chart. So when I get a new bar, that's at 10, and it's going to look at the prior bar. Well, the prior bar is down here. It has to be under your current bar. So I don't know if that makes sense or not, but it just has to be, it has to be smaller than your bar. And I had it at 10 because I was working a bigger bar, but normally I think default is 6. So let me tell you what that means here. Oh, I should have taken a picture of that. Let me do that real quick. Here, pause. All right, I just took a picture of that for later. I can close this. Okay. So what this means is, like for instance here, it's going down. It's going to measure 6 ticks from the prior bar, and it's going to put an entry trigger there. Right there, entry trigger, 6 ticks. It's going to paint a bar, depending on the color. It's going to look like that, so you can see it. It was a lot smaller at one time. I couldn't see it. It's too hard. So anyway, what's going to happen is that if this were up here, let's say we wanted to go long. And in order to go long, you need to have a down bar, obviously. So this would have been there. But then because it moved down, it's going to move down and down and down and down until you turn it off or until it gets popped. So there's your 6 ticks from the prior bar, and it got popped. So now let's see what the next is. Okay, quantity 1. So I'm going to throw on 1 quantity, and I have an offset of 0. So that means it's a market order. If I had an offset of a negative, it would be a limit order. If I had an offset of a positive number, then it's going to be a buy stop or a sell stop, whatever. In this case, it's a market order. So basically, as soon as I breach this, and it has to be breached, I have a little indicator on the price lines on here because I thought I did. Do I? Let me look. I have NinjaTrader has a price line indicator right here, and I have it set for. I'm only looking at the ask line. I turned off to show the bid and the ask. I only went last because that's what it needs to be able to breach. So it needs to breach this price right here at 6 ticks. And once it breaches that, then it will trip your order based on your numbers. Okay. So in this case, I would have been in at an entry at a market order. Now keep in mind market orders, especially depending on the time of day, you know, you're going to have slippage. I've noticed that at night like this, probably 4, 5, 6 ticks of slippage. During the day, I don't really know so much. You know, it gets down to like, you know, 2 ticks or 1 tick, or it depends how fast the market moves. But you will get slippage on a market order. So you know, more than likely not going to get exactly at 6 ticks. So anyway, the offset is nothing right now, so it's a market order. And then quantity 2 is 1. And then offset again is nothing. Quantity 3, I don't have a quantity 3. And the reason why I split these is because down here, when you talk about the management part of it, and if you notice, group A, B, and C are all trade management. Groups 1, 2, 3, 4, 5 is all cosmetics on the screen. So anyway, getting down here in group B, entry target for 1 is 12, but entry target for 2 is 20. Now, if I just put 2 in here as quantity, well, then they would both be using this. Oh, I didn't know I could do that. Oh, yeah, I guess I did. Cool. I'll turn it off. I don't want. So the profit target would be 12 for both contracts, but I don't want that. I want to split them up, so that's why I have them like that. But I also want the same. I do want the same stop. Now again, everything's going to be mathematically calculated from this entry trigger. So even if you have a little slippage and you don't get in until up here, everything's calculated from here. So if you want to see what your 18 ticks of stop is going to put it down here, that's your stop. That's where your stop's going to be, not up here where you get filled in on a market order. Okay, that has to be important to understand. That's why I say it's important. And the same thing with your target. If you're looking for 20 ticks, well, you have to say 20 ticks from here is going to get you your target. However, you didn't get filled until up here because of the slippage. So therefore, you know, you might want to make your thing 24. If you want to account for slippage, then you want to make that 24 for your target. In this case, I have 20, and assuming I get filled in there, then I'll get my 20. But I can tell you right now, with market orders, especially at midnight or whatever, it's not going to happen. You'll get some slippage. So, okay, so then moving on, I have moved to break even on. That means at 8 ticks from my trigger line, it's going to move, what was it? I think 12 ticks. Negative 12 ticks. Where is it? Negative 12 ticks. So that's going to move a negative 12 ticks from the entry trigger. So when I get here, my stop's going to go there. And that's just a one and done kind of thing. The next thing I have then is the auto trail. When I get to 14, it's going to go to 22 ticks. So then 14, boom, actually I think I'm probably in my trail right now. So I would be doing it, and it's going to go from here, and it's going to go down, what was it, 22 to there. Now that's how I have them set. You can set them any way you want. So I have it set, and then when it gets to 28, it's going to trail 28, and when it gets to 80, it's just like the ATM. There's no different. You'll notice here that I am going to be adding the pivot. Actually, that's in the works right now on my pivot stops. I'll have to do another video on that one, on how that works. Actually, I do a video on it if you looked at it, but I think most of you guys know what the pivot stops are. That's being added in here, and that'll take over also. That'll hopscotch with the two of them. That's the same thing I have in the ATM strategy. Actually, that code's coming over. So if you don't want those, you can just uncheck them, and they'll be off. But all the trail stops do go together. So if you had 4 contracts on, they're all staying together based on these numbers. It's only when your initial targets are going to be split up, but moving up in your stop is your stop. So auto trail is going to have 1. Now you could separate your stops here if you want. I guess I keep putting enter like I could change it. If you wanted to have let's say this one here, you want your first stop off at 18 and this one off at 20, you could do that. I don't know why you'd want to give this one a deeper pullback, but it's up to you. Now let's talk about the offsets here real quick then too. So you could put 1 contract on and you could do it right away. So it gets in instantly as soon as it hits the trigger on market order. And then you can put a second one and you can put an offset on it. You can say on this one, I want a positive, a positive offset of 10, whatever. And so that means it needs to go up. It has to continue, in this case, going up 10 more ticks from the entry trigger before it hits your buy stop. Then you're going to be in. And that more than like that's going to be a buy stop. And typically, depending on the fast of the market, it could trip you out or whatever, because NASDAQ doesn't move fast. It could stop you and get a jump ahead of you before it takes it. And then the other one is going to be if you want a negative offset. So here, if you want to put a negative 10, once it comes and breaches this area and trips, your order would go down here 10. Okay, so if it continues to go up like it did, you might not get filled unless it comes back down and gets you. But that's how you do your offsets. So you would have one on instantly, one off at a negative, one off at a positive, or however you want to work it up, you can. Now, let's say you did have a negative offset, and it hit the trigger right here, it puts the order right here, and it's sitting there waiting. If it gets 15 ticks away, it's going to cancel that order. Actually, and one more or two more ticks, and 2 more ticks from this entry trigger, a total of 15 ticks from that entry trigger, it's going to cancel this order because it's hanging out there too long. Now, you could change that, but I have it set for 15 because if it doesn't pick me up in 15 bars, I went out, or 15 ticks, I went out. So it's just hanging. I don't want to. It's considered a stop. Yeah, this is more of a stop for your pending order. Cancel if not filled. It's a stop. So basically, if it doesn't get filled, it gets stopped out. This one is the same thing, only for the entry zones in the auto mode. And this only applies to the auto mode. And this is that if it goes through the zone and it keeps going and going and going and going and going, and it never pulls back to get you based on your numbers, if you're obviously in market order, it's not going to matter. You'll have your stop placed. But if you're trailing for some reason because you have an auto trail or something like that, and it gets too far away from that entry zone, at 15 ticks away from that entry zone, it's going to invalidate itself, and it's no longer a valid trade. Okay. That's that. So I know it's kind of hard and confusing to understand it, but you just got to play with it. Okay, so that's the B part of it, and there's all the stops. This I'm not using 3, so it doesn't matter. Move to all right. So we talked about all that, and now I'm on a picture. So this one right here, this 150 right here in Group C, that's how far this. It's not on. Where is it? Oh, I guess I don't have it on. That's going to be how far this box is. 150 looks like about right there. If I said 0, it would put it right there. And if I said, 500 or whatever, pixels, I guess it is, it's going to move it over there. So it depends on where you want it, but it's going to default right there. It depends on the size of the chart and how much real estate you got, but that's what it will be. Okay, so let's go back into here. And let's go back to where it was. So that's this. So that was where we just talked about. Okay, so targets, daily target. If you make say 500 right now, they're 0 obviously, but you put 500 bucks in there and it makes 500 bucks, it'll stop trading. Same thing on this one. It requires a negative. It even says right there, it requires a negative. If you're down 500 bucks, so negative $500, it'll stop trading. Okay, so not using that. By default, it's not on. This one here is consecutive. If you're in the auto mode, I'm sorry, the manual mode only. How do I explain that? Let me turn it on. Let me turn it on. Get this out of the way. It's going to go right here. So right now it's going to default into the manual. So it's in the manual mode, and it's always going to be on pause. When you first turn it on, no matter what you do, it's going to be on pause, and for a reason. But so now let's say I wanted to do it. It's going to say now go on an up bar. So in order to get the up bar, it needs to have a down bar. Okay, because remember it's the prior bar, so I need to have a down bar. So it's going to go up, 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 up. But as soon as I get the down bar, you'll start seeing a green trigger. Now, if I went right there with the down bar, I'm already got a green bar. So all I need is 6 ticks from this bar here. 6 ticks, and boom, there's my entry trigger is going to be right there as soon as I turned it on, and we're good to go. But getting back to what I was talking about, this consecutive is right here, and it's off for a reason, because when I hit this down bar and it takes the order and trips, it breaches it, and it sets the order. Now, obviously, if I'm in the order, it will take it. But if it places the order with the offsets, it will turn off that button, meaning basically it's a one and done. If you turn this on, and I'm thinking about making it a hot switch up here, but I don't really use it. If you turn this on, then it'll stay in that mode until you turn it off. And that's kind of the reason why it was originally done like that. And I'm like, oh, this is dangerous. And so therefore we changed it, and we actually put it in there as a switch. Originally it wasn't going to be a switch at all, but then it turned into a switch, and I said turn it off. So if you did turn it on though, when you say enter on a down bar, and now you do it, and now it takes it, and it gets stopped out or hit your target, whatever the case is, it's still going to be on. So if you said, oh, I just made some money, and now you go to the restroom, forgetting that this is on the next down bar, you're going down. So that's why it's kind of dangerous. So anyway, this one here, the defaults are set for the algorithm time frames. It's shut off a couple minutes before. Then it doesn't turn back on again until Eastern time, obviously, 6:05, military time, of course, and then just on and off for the day. So we're good. This one here, okay. So this is audibles. This has something to do with the way Ninja runs their order canceled. In a strategy, I guess everything is order canceled. So if you hit your target, order canceled. Hit your stop, order canceled. And I didn't like that. I wanted to hear target filled or stop filled, or whatever the case is. I wanted to hear auto trail, because you don't have auto trail in the strategy by default. It has to be programmed. So I says, yeah, I want to use these. So if you want to use these, you obviously check it by default is on. However, you would need to go to your control panel, go to tools and options, and you need to kill order canceled, because this would take precedence over that one. Assuming if you have play consistently on, it's going to play all your alerts, which are however order they come in. The first alert, second alert, third alert, and you can go crazy with audible alerts. So that way you would hear it, I suppose, but that'd be crazy. That is a lot of alerts. So I do not have that one on. Basically what will happen is, and sometimes you probably hear it, you'll hear an alert and it'll get cut off, and then another one will go on because it's more recent. So sometimes, you might hear order canceled, a double one. Well, if you turn that on like that, well, then you would hear order canceled, order canceled. If you don't have it, it's just order canceled. So in any event, you have to delete it there, and you could easily put it back in. So that allows this one, this out of here, that allows this one now to then take an effect. Now, of course, you won't have an order canceled on all your other strategies or whatever else, but I don't really care. If you don't want to use it, don't use it. Okay, then the auto trail. Now this one also is the repeat frequency. Now this is just relating to the audible sound. I know my daughter likes to have it set for 1, so she can hear cha-ching, 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 cha-ching. It gets kind of annoying during the day. She trades at night. She's still in school, so she's 13. So she likes to hear it like that, but I don't like to hear it that fast. And I like to hear it, don't get me wrong, but my God. So every 10 ticks, it's going to go cha-ching, do the audible thing. And this is going to be different than the repeat frequency in here, which is being programmed now as we speak on the auto trail. This is going to be down here, maybe on top, somewhere like right here. It's going to be, and it's going to say frequency. And that means is that right now, currently, when it hits 14 ticks, your auto trail, every tick thereafter, it's going to move. And the problem that I'm finding, though, especially with NASDAQ, being it's so fast, it has to go to the market, get your order, come back to Ninja. Ninja has to process it and then place the order. And it's already moved the tick. So now it's go to the market, back to Ninja, plot it, back to the market, Ninja, plot it, and back and forth. And it's constantly changing. And the discipline manager sometimes shows it as a negative or a naked order, and it will kill the strategy. And a lot of times what happens is Ninja or NASDAQ moves so fast, it gets on the opposite side of the stop strategy. So when it comes back and says place a stop, the price has already been there and it crashes and you get the error and it's out. So that's with NASDAQ. And that's preventable. I just need to slow it down. So I'm thinking, 4 ticks every, just move every 4 ticks. And it's just NASDAQ, really. Everything else moves a little manageable, and that's why I'm also going to be. That's actually being worked on right now. That frequency, and also what's getting added is like the sliver, the volume sliver, and mantic market. And it just when it's nuts, it just can't. It's just too hard to keep up. It's not as accurate. So where were we? So that's that order canceled. So next thing is, this gets a little bit more sophisticated with the synthetic data series. This really refers to more of the manual mode, because if you want a tight trigger, let's say you want 6 ticks. You want it to go at 6 ticks, but you're working on a 15-minute chart. Well, you need to have a down. Remember, you need to have an opposite bar, reversal bar. So you need to have. So you have to wait around 15 minutes for it to get a new down. Hopefully, get a down bar. Then it has to go up 6 ticks. So you could force it to use a different time frame. By clicking this here, you could say, okay, I'm on a higher time frame, but I want to use this time frame. And you could force it to use that. This is just now if you notice, we're out of group, so just group E is it, and then it's just your normal settings that that Ninja has. So I think we're in. So let me start. So what I want to do now is I want to let me do some changes here. Let me look through here real quick, because I want to turn off all filters, exclusions as I'm calling them. Transparent, no EMAs. I don't really care about all that. Trigger is 6. You know what? I'm just going to do one contract. I don't need to change these because they don't apply, but I'll just throw zeros in there and make them cleaner. I'll use this. You know, maybe, well, that's fine. Okay, well, I'm on a 5-1, so it doesn't matter. I mean, if I turn it on, it's just redundant. Okay, so let's do that. And what I want to do is, let's just show you how it works. All right, so let me, because this is NASDAQ, I'm going to go back to that 13.2 chart. You know what, I'm going to undo this here. I do want to force this to go to the 5-1 chart, because I want faster, and I'll show you here. Okay, so let's kill all this garbage, and let's go here, and where's it coming? There we go. Okay, so let me zip ahead here and get off midnight. Okay, so what I'd like to do, well, let's just, all right, so let's do this. Let's, where do we start? All right, well, let me show you these, just get these out of the way. So in order for me to go down, if I want to go down, I need to have an up bar, which I already have right now. So, down. So I'm going, well, I probably should be going long, but in any event. So you see here's my trigger, and it's a red trigger. So there, I just went down 6 ticks from the prior bar. Let me pause this here for a second. I think I can kind of get off this point. So prior bar, 6 ticks, there it is, and I'm going down. Of course, I'm in the long entry zone. And then now keep in mind, my target, or my stop, is from not where I placed the order. You have to measure it from the entry trigger. It has to be the entry trigger, and it's 18 ticks is I stop. All the math starts at the trigger. And then this one here is 6 ticks from the top, and then this target is going to be not from here, but from the entry trigger, and I think we said 12 ticks, right? That's awfully tight. Let me change that. In any event, you can see what it's doing here. So that's how the math works. So everything starts as entry trigger. Now you notice a lot of people, and I see it all the time, they measure from where they got in. Well, of course it makes sense, but it's got to be the trigger. So so that was a down bar. So we could do the same thing, and we could just turn it on now, because it's not going to do anything until we get the bar.
Target filled.
So now it's looking for an up bar. And you'll notice that it chases it down.
Order submitted.
And now it got it all the way down there and stopped. So it chased it a lot faster than you can move yourself. It chased it until finally it got 6 ticks from the prior bar. Bada boom, 6. And now here's the entry trigger. And we got there's our target from the trigger. And I guess I can steal this one. This is entry trigger down to the stop. Oh, you know what? It already moved up because our break even was if it moves whatever 8 ticks or something like that, go to 12. So now it should be at 12. So let's see. Let's see what this one is. I got too many damn things. Let's get rid of them. Do it again. 12. So there I'm at 12 ticks. I was 18 and that moved it up. Okay. So that I think you got it, right? I mean, now one beautiful thing about this is I could just kill that trigger, and now I have no target at all. Not trigger, target. So now the stop is in essence, you don't want to kill that. I think you'd have a naked order if you did, and if you didn't have Discipline Manager to kick it out, although that version's not available yet. So in any event, there's no target. You can just, if things are moving, let's say you're just 5 ticks away from your target, you got 100 ticks into it, and the thing is just plowing through, just kill the target and let the stop handle it. I do that all the time. So anyway, but you can move this. You want to come back down. Now, when you come back down like that, it's going to move right back up. You did it so fast, I guess. On the NASDAQ at max. It's kind of crazy. Anyway, so that's the manual mode. Right? So now let's go to the auto mode. So you go to auto mode. It's going to go to pause. So now in this case, the auto mode, think of it as the entry zone. Your entry zone is, think of it as that prior bar. So when it gets into that zone, in essence, it's triggered your down bar, in this case a down bar. So that means is that as soon as it touches that, you'll start seeing the trigger. You're not going to see the trigger until it actually touches it. Once it touches the zone, and you can manipulate where you want the zone. If you want the zone higher, lower, whatever the case is here nor there. And then once it does trigger, you can also manipulate how you want it to work. Limit order, stop order, positive offset, negative offsets, whatever the case may be, you can manipulate that. And that's for, later on in the video, which I notice here now is already 41 minutes. However, you can manipulate those things. And I'm going to get into that. That's what the purpose of this was, to be honest with you. I want to show you how to kind of look at your market and your chart, whatever it is you're looking at, and get an idea of where you want these zones. And once you start figuring it out, then it's a matter of how you want to get in. Do you want to get it on an offset or what, how many, etc. So I'm not even dealing with trade management right now. So in any event, so it's coming down now and it's turned red. It's got a zone. In this case, so it's coming up, it's coming up, it's coming up. As soon as it touches, it has the red entry trigger. And then it goes up one more tick and it moves it up and moves it up, moves it up, moves it up until finally you get the high and it gets you 6 ticks and you get in right there. Now, there are times where all I could do is just touches the zone and then you get in 6 ticks under it. That could be. Now, it could be times where it goes up, 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 and then eventually what happens is it cancels out. Remember, it invalidates because it gets too far away. Or what sometimes will happen is it comes up like this, goes through your zone, and you're like, okay, now it's going to come down. And so now it starts to come down, and you're like, oh, yeah. And it just does this and misses your zone, never touches it because it's timed out. The length is too short. So now you don't get your zone because it was 1 bar too many. There's been a couple times where I get in right like that, right at the tip of it. So as long as it touches the zone, but you can make these longer. So again, once we review this, if you need them longer based on whatever size chart you're dealing with, but on the other hand, I don't want them too long because of the fact that you don't want these orders, because think of these as order triggers. As soon as the price gets there, it's going to trigger that order. This one's going to be a long, this one's going to be a short. This one will be a long, this one will be a short. So it's going to trade that order. So if it gets too far away from you in bar length and then it comes back, do you really want that in there now? I don't know. So that's based on whatever. I don't know what your strategy is. You got to play with your strategy. But in any event. So I'm going to turn it off, let it go. Now, of course, you can just do longs only, and this is manual. So if you only say, hey, I'm in a big long trend, NASDAQ is going up all year, I'm only dealing with longs, or I'm only dealing with shorts, forever, then I'm a long guy or I'm a short guy, that's all I ever want to do. I don't really care which way it goes, so
you can do that.
So now it's just a matter of, okay, well, so you kind of got the idea. I'm try to get one here. And then after this, I want to now show you how, okay, so now it has to come down, and it has to come down quickly. There, boom, you just saw it. Now LS1, there's LS1 and LS2. LS1 just means long setup 1 or long setup 2, and then obviously SS1 and SS2. And all that means is how it comes in, and I'm measuring that because the LS1 means it's coming in from the top. LS2 would mean it's coming in from the bottom. And it depends on how it sets its orders. So if I'm coming in from the top, now I need this entry trigger. It's going to be there. If I were coming in this way, it would be a buy stop, and then it would pop you in that way. And then it would chase you also too. So it's management-wise, as far as logic is concerned internally, it's handled a little differently. But as far as you're concerned, it hits this blue, it's going to go long. I mean, simple that. Now it's not long yet, you notice, because it needs to retrace 6 ticks. And if it doesn't do it quickly, I'm going to be out altogether. Well, maybe quicker than that. If it doesn't do it quickly, this zone is going to be over, and it's going to be invalidated. So it's 2 o'clock in the morning. So there you go. I breached it. Okay, so now it's set our target and our stops as based on what we set. And I have the price extensions under tools that if you want to, I mean, there's so much that you could do as far as MFEs and MEAs or MEFs. So anyway, I don't know what your procedure is for what you're looking for, your numbers, et cetera, et cetera, et cetera. So anyway, you got the idea there, right? I mean, I could turn this on super duper fast. CL51. See, notice that timed out. So it missed it. I didn't get it. I'll put on my, this is the status box right over here. So you can kind of get that. That's downloadable. So anyway, you kind of got the idea. Now this is what it's super fast is. 5 o'clock in the morning. Heck, probably gonna turn it down to 50 now. Now keep in mind I'm only shooting for 12 targets, so this is I don't normally wouldn't do that, but right now just go. Okay, fine. So our stops are a lot bigger than our targets, but whatever. You can also do this. Just kill it.
Orders target. Orders target. Orders submitted.
Okay, so you can see obviously, trying to get 12 ticks and giving up 18 is probably not the wisest thing in the world, but this is how it works. So you can see the LS1s, LS2s, etc. So there we go. So I can just do this all day long. Losing all kinds of money. Okay, so let's go now. Let's do this. So let's get out of this order. Stop taking orders. Okay, that's fine. Let's go back to the beginning so I can clear it out, get a new 0. Now what I want to do, okay, so that's all the settings. So real quick, since I'm talking about that, hold on. Here. Let's talk about the settings. So I'm going to put this on the web page. These are my internal notes. There's more, but these are the ones that I really care about. This is basically this. This is this. This is what I've used. So, blow it up for a little bit. I don't know if you can see it or not. And it just gives you the description of what it's going to do. Most importantly, one that I would read would be, well, obviously 5-7 is one you should read and know about right there. And these just show you the default settings that I have. But I'm changing those, so I'm constantly changing those. So I'm tweaking and adding and all that. So in any event, so 5-7 and a group right here, the trade management section, entry trigger. That's important. Auto trails and all that are pretty much, you know, you probably know how they work. You could read it if you want to. Cancel if not filled. And there's the other one is invalidate setup trades. So you can kind of read all that kind of stuff. You can print this out. It's only 5 pages long, so it's not the end of the world. This here is something to, you know, like we talked about that. I don't use it very often. The synthetic data series, blah, 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 on, off, and end. Okay, so I do think, though, that this will help you. So that way it would be your first line of defense rather than listen to an hour of video again. You could just go to this little cheat sheet, if you will, and you can say, what the heck does this one do? And you say, oh, EMA requirement. And if you see any typos in it, let me know. I'll tweak it. But, I mean, this thing has been, you know, I've had this for years going on. So anyway, I can give you that, too. So let's go back to what I want to do. Let's turn this off. And I don't really care about, I'm not right. So this is what you need to do when you're looking at your charts. First and foremost, turn everything off. So turn off all this business, turn off 2.1, the requirements. Bring this down to 1. Eventually I might have a switch on that just turns it off altogether, but it won't accept 0. So I'm going to be tweaking that so you can turn it off. 999 will just max you out. So you're basically turning it off. We don't really care about the moving averages only because of the fact that we're not using them with the requirement. So there's no point of even seeing them. I don't want to see them. I have this cranked to 80, a little higher, only because I want to be able to pull out that entry zone because I want to shrink this screen down. And once it's shrunken down, the entry zone it could pop up a little better at 80 opacity. Okay, so I'm going to turn all this off. I don't care about any of those plots. A, B, C, D doesn't matter because we're not dealing with any kind of things at all. So the only other one that I want to work with is 5.7 and 5.8 right now. And I'm going to do an offset of 0, and the length is going to be 10. So I think I'll start with that. Okay. So and I'm on a 13-2 chart, and this is NASDAQ. So again, it depends on the chart, depends on the market, et cetera, et cetera, et cetera. This I can kind of get out of the way. Yeah, I don't need that. I don't think. So let's turn this on. So what we need to do is on this chart for this market, what we want to do is say, hey, what do we like? Do we like any of these here? So let's start over here. So is that a good chart? Yeah, that's fine. Now, whether or not we get in it or not is here another. We could change that. You know, how we handle the management part of it, that's all tweakable. What I'm looking for right now is that a valid number? Now, do we want to go long here? I mean, you know, technically it's a good trade. How much heat do we have to do? Well, let's just take that. And 28 ticks. Well, I'm only at 18, so you know, that's kind of an iffy one. You know, 18 ticks. I mean, actually, what I've been doing lately, I've been doing 50 ticks, so that is fine. So you know, it depends on what you're looking for. I mean, right now the settings that I'm working on right now, the stop is 50. Whoa, what happened there? Sorry about that. The stop is 50. I was working at 40, but I was talking to somebody and they're doing 50. But regardless to say, what the heck is going on with my computer? Okay, there's some trouble here. So in any event, 28 ticks, that's certainly within a norm. So that's a good one. Now, is this one good? Technically it is because, well, again, we're not dealing with any other higher time frames. We're dealing strictly with this one. And so you look at these and say, okay, what could I get rid of? I mean, going short here, things have changed. I don't know, whatever the case is. Is this good? That's a good short. You can see how it triggered here, and it went 32 ticks. So, I mean, certainly it would go break even. So you'd be covered there. This one missed. So even if, well, it all depends on where if we change it. We could tweak these zones. So right now there's your zone at 0 offset. And you can see the price came down to a valid, but it just missed it. Had it just touched it, you would have been long. But let's tweak that here a little bit. So what we could do, so take a mental note of this picture right here, and maybe this one here that we measured. Okay. So let's go down. Well, first of all, we got to turn it off. this is the time consuming part. Let's go back to the entry zone, 5-7. Where is it? Where am I at? 5. Why am I at? Oh, it's up here. So I'm looking at 5. Group 5. Group 5. Wait a minute. I have 2 group 5s. There's the group 3. Okay. Good to know. That's why I'm always surfing around for it. Okay. I'll change that. Anyway, group 5. So this video will be old. I have to do it again. So 7. So let's say in this case we want an offset. For some reason I was like 6. But let's do an offset of 10. And I'm trying to think 10, which way is that going to go? So let's stay on for a minute. Is it negative 10 or 10? I can't remember. I think it should be negative 10. Yeah, you can see it gets too far away. Okay, wrong way. That needs to be a negative 10. So I'll turn it on now. Okay, just turn it on. I just noticed that. I mean, I was just surprised I haven't noticed that before. Okay. Okay, so now you notice we moved the zone up a little bit. So you could see, let me close this. You could see where it qualifies on that right here. Where's my zero? It qualifies right here on this bar. Okay, that's where it qualifies. So where you have the zone, if you want it right at the spot where it qualifies, then I'm at 10. I'm thinking, well, it's a 13 through charts would be 13. So if I change this to 13, negative 13 that is, $5.3. Oh, this is just 5. Oh, I see what it is. Okay. So let's go negative 13 because that's the bar length that we're dealing with here. And you can see the zone is going to be right when it trips. Exactly. Now that's not leaving any room for offset. That's like basically as soon as it trips and says, "Hey, I'm valid," boom, you're in. I mean, your entry trigger is on, and it's active. So the question is that do you want it to be right then and there, or are you looking for an offset? I kind of like the offsets, but I mean, how much offset? Even if you, let's say you didn't get in and it ran up real quick and didn't get you in, right here it would get you in. How much heat would you have to take? 10 ticks. And if it did get in instantly, how far did it go before it retraced? Right here. It went 13 ticks. So 13 ticks, your stop would probably be at, where would your stop be? Your stop at 13 ticks, well, I don't know what it would be at. Depends on what your numbers are, but I think I would need 14 ticks, and then it goes to a negative 12 on mine. So let's say it did go to 14 ticks. Let's say it went to 14 ticks, and then my stop is negative 12, so I'm still good to take it to the next level. So then it would go to here, whatever. You kind of got the idea. So that's a good one. So here, this was, now again, if I want it right here is where it triggered. And if I want to get in instantly at the second it triggers, then this is a good one. Now this one is a bad one. I'd lose this one because I'd get in instantly on this one. So how do we get rid of that one, I guess is the question there. So let's start, this is where we start adding some things, and maybe we'll just focus on, I don't know how to focus on any one thing, but this is kind of where I'm going with it. So now let's start adding some things. So let's go into here. Let's just look at this area here. Okay, so I got to turn it off. This is where I kind of like a snapshot. I could take a picture of it. Because what happens is in order to change any settings, you got to turn it off. But if you turn it off, you lose your setting. So you got to take a picture of it, which I suppose I could do. Let's do that. Take a quick picture. Take that. I'll just throw it out of the way for later. There you go. Okay, so let's turn it off. Do that. Turn it on. Now come back and let's do. Let's add another group. let's add the next highest time frame up. Let's see what that does for it. Does that do anything? Okay. Did that get rid of it? No, it did not. It's still a loser. Okay. So maybe let's look at some. It did get rid of the one that was right here. It got rid of this one. So, and the reason for it is because that higher time frame is not on a. They're mismatched. So you gotta wait. So this is how you do it. So let's go back to here. Turn it off. Turn it on. Go up here. Let's try this one. See what this does for us. There's the original. Okay, so they're short again. Now that one we don't want. You know. So these we would have missed out altogether. And the reason for that is because that higher time frame, this one here, it's going down. So you're not going to get any. You're not going to get any blues. So let's see. Let's say if we want these, we do like these. Here's another way to filter out. So let's say let's go back to these here. This group, which was I want to say the third group, right? So let's go back to that. Let me see if I got it correctly. I gotta wait. This is ridiculous. This is the killer. Okay, that's not it? What was the settings on? See, I don't even know what the settings were on that one. Or maybe they weren't any settings at all. Maybe I wasn't synced to anything, was I? I don't remember. There's too many. I've been doing so much of this. I gotta know what each setting. When I take a picture, I gotta somehow I gotta write down the settings so I know what it is. Okay, that was it. Okay, so these are the settings, right there. Okay, so I could just leave that there for now. Okay, so I'm not synced with anything. So now, well, okay, syncing really didn't do anything for me. So let's go to the next one, and that's going to be. Let's start bringing in some moving averages, and let's just work on the two. So I'm going to put some color to these so we can see get our colors back. And I'm just going to use the 2. I'm just going to use the 2, and I'm not going to, I guess I could, well, let's just turn them on. I'm only visualizing them. I don't have them turned on here. Let's just do this. I just want to be able to see what they are going to look like, if it's even a possibility that we could do it. Okay, so they're going to stay on. Now look at our moving averages. So this one would not have taken because the moving averages are wrong. So this short would not be valid, at least on a 2055, which we're working with. I could do a 20. I've done a 10 and a 20. I can play with that. But right now, basically on a smaller one, it's not going to work. This one will work. No, this one won't work either because they're mismatched again. So let's go ahead. This one would take because they're in the proper order. This one would take because they're in the proper order. So these two I would lose. So let's do that. So let's turn it off, turn it on, go up, turn on the orientation. And the next thing I can do is change the size of the moving averages. Sorry, so now we gotta wait. If you think you're gonna get this done in like 2 weeks, it's not gonna happen. I don't know why I didn't get that one. Oh, maybe because I could tell you because right when it turned color and qualified, they weren't. So this one was a red. So I really like that one. So let's go do one other thing, and this is how you have to play with it. But one other thing here, what we could do is see what happens, and that's going to be, let's change that to a 10 and a 20. I just want fast moving averages just to kind of see. I just want to have some sort of something that says only go in one direction, the direction that I'm going, and that's based on a slower moving average. So this one I didn't get. This one I did get, and we already said it was a good trade. It was just only 18, 20 ticks or something, so it's manageable. This, if I didn't get that one, this one is a valid trade. It just didn't go anywhere. Now again, you might not still get that one, even though it shows a zone on any of these, even though they have a zone, depending on your trade management and your offsets and where you place the entry zone, you may not get it. So it depends on that too. So this one here, this is valid, and you would definitely get this one. So this one is on, and you could even see, even if you didn't get it right here on a market order instantly, you could see it pulled back, right? It's kind of hard to see it. I could do the opacity is a little too tight for you. I could turn that down to 60. You can see the wick right there. So you definitely would have been long right there, and that definitely is a winner. So, you know, and that didn't stop until even that doesn't qualify. So there's 50 ticks right there. And on this one, even if it's a loser, 50 ticks loser. So assuming you got it. Okay, so let's move on. So using these moving averages, there's a good one. There's a good one. There's a good one. There's a good one. So these are all good. This one is, well, what's the heat? If I would have taken that one. 60, yeah, I'd be out. I'd be a loser if I did take it. So so the question you have to ask is, how do I prevent that? Well, I can tell you right now how tight this is right here. The spread. Let's do this. So let's take a picture of this, and let's do this. Let's take a picture of this, and snap that. Get out of the way. Let's add the spread, because when you start seeing these tight moving averages, so I'm going to turn it off. Turn it on for later. The spread right here. So let's go back to the default to 5. Okay. So it didn't even put it there. So that short doesn't even show up because the spread, it starts getting too choppy. So that one eliminates. These are still good, and those are fine. This one I got rid of, which was right here. Now that would have been a good one, but this, well, why didn't it? I mean, that spread 5 ticks, seriously? Where was it? Right here, right? Oh, come on. Look at the spread here. Seriously? Let me go, where's my ruler? At that bar. That sucks. All right, so you missed that one by a tick. What are you gonna do? I mean, you could, now here, you know, so what you could do, again, I don't want to really dwell on this too much, but you know, turn that one on. Now again, what you have to look at is how many does it turn off. If it turns off too many, if it just turns off that one and maybe one other like it, then I'd say great, 4 is your lucky number. On the other hand, if it, you know, by doing that, sure, you bring that one back, which you did. However, so you eliminated this one by going to tick a 4 spread. You eliminate this one, you still get that one, so that's good, so that's fine. But what else did we lose? I mean, by changing that from a 1 to or a 5 to a 4, did we? I'm looking on the other screen here. Just quickly, I'm just trying to see. I don't know how to do this with multiple screens, but anyway, I'm trying to show you. But this is what you got to. This is your homework. So right here, we didn't get. What's it? 1832. Well, I guess I didn't take a picture of the time. Oh God. Okay. Well, in any event, I get dizzy doing this, but you kind of get the idea. I don't know if this is the same one or not. I don't have them marked. But I did not eliminate that one because that spread obviously qualifies. So right now we have a spread of 4, and right here it's obviously 4. So yeah, it's fine. So that's a qualified trade. how can we eliminate that trade and maybe not eliminate something else? Well, is there anything else we could do? Yeah, we could bring in another one. If we bring in
a different time frame.
Again, we're not synced with anything right now. I do think we should sync with some things. So, but in any event, let's just do this one more time. So I do that, and then I'm going to end this video. So I do this, do that, come up here. I'm going to sync to this one. Okay, and I got forward spread. So let's see where we're at with this one. Okay, so nothing here, which is fine. So we get that. We can't get rid of this short for some reason. So that is because
both of these charts stay down. Now what we could do is we could add in a smaller time frame.
But at some point they're going to do it. These line up. I mean, they are red. The moving averages are red. The spread is accurate. It's valid trade. It's a loser. What are you going to do? This is a winner. You can see the pullback there. This is a winner. See the pullback there. Is that a loser? 31 ticks. Depends on your stops. You know, could be a loser. Don't really know. Of course, depends on where you get in at. You know, if you get in right there at market order. Now, the other thing you could do is the possibility of moving these zones a little bit.
Now, we have these zones set at the exact point where they trip. Based on this chart at 13, a negative 13 ticks, because we're on a 13-tick chart.
If we brought this down a little bit, now we could bring it down. We could bring it up. I mean, here just to show you. Let's do this. You could see how at some point, where am I going? 5, 7. Let's do a positive 20, just so you can see it, like truly out of whack it is. See, you're gonna never get anything. It trips here, but you know your entry box is just way too long. And let's go to the other extreme then. I mean, at what point do you want to say only when it continues to go? So we could do instead of the negative 20 or a positive 20, we could do a negative. Let's do a negative 20 because negative 13 gives you right then and there, and now you're saying you got to go up a little bit more. So for a long, it's saying there's your, but you're not. So if it instantly turns, you're not going to get it. See right here, you never would have gotten it. So there's a zone there, it's valid. However, you're not going to get the trade because it never continued. Now you're giving up trades, you're giving up ticks by doing this. But you can make up those ticks by doing an offset. So for instance, if you wanted to go with this way and say, okay, here's my trigger right here. There's my trigger, or I mean, there's where the entry zone starts, right there at the color change. And you can see it kind of weakens out. That's why I kind of shut these off when it starts weakening out. And I just know that by a bar length and just by doing this long enough. But yeah, I don't really want it hanging out there. I mean, I could make it a 50 bar. What's the width on that? I mean, if I went that far, you're looking at 29 bars. You know, do you want this thing hanging out for 29 bars? It would have been a good trade. But in any event, so we're long right here. It's long right here. And so it continues to go, but now we got to deal with this heat here because so now we're giving up, what was it, 10 ticks or something like that here for this one here. So we get there, we get our entry there, and let's just go to the center of the zone. Oh, it's only 6 ticks. So we get in at 6 ticks, and then we have to deal with the retracement. I'm assuming we're getting in a market order. And then we deal with the retracement of 10 ticks. No big deal. Now, if you did an offset of that and said, look, I'm going to give up 6 ticks for my zone, but I'm going to make up for it where I'm going to do an entry trigger, an offset, you know, when you get to the qualifier. So that means there's my zone. However, if you do a negative offset on your order, the negative offset is going to be, let's say if you do, let's make it 6 ticks or something, or 8 ticks, whatever it might be. So now your order's here, right there. you'd still get in. So you get the confirmation that it's going to go in that direction. You get a pullback. So I mean, that's something to look at. Same with that one. Actually, it's not bad. This one would be a good one too. You get in, it hits the zone, it hits your, it makes your trigger, and it puts your order there. Now here's the problem: is if, let's say, the trigger, depending on where it is right here, your entry trigger, or your order. It's tripped. It's hit the trigger, and it's tripped. Let me think here. No, this would come back down. It hits the trigger to activate it. It would depend on how you do your market orders. If you have a negative limit order, as soon as it trips, it's going to put a limit order here and sitting there. And if you might not get it, and then when it gets up here, it's going to cancel out. But let's assume it goes right there, and you do get it. Well, then you're in. The other option would be is that you do a positive offset. So boom, you've tripped. Now it's active. Now we're just waiting for the entry. So it comes down with the red trigger, entry trigger, comes down with that red entry trigger, down, 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 down with the red entry trigger. And as soon as you get 6 ticks up, you're in. So you'd be in like right about, well, 6 ticks from the bottom. You'd be in right there.
So you'd have a better entry. So there's your entry. So,
but does that happen all the time? Does it retrace all the time that much? I don't know. This one retraced 11. So let's find some losers. So this one you would have never got. It's a short here, but you would have never, well, yeah, you would have gotten it right here. You would have been in short right there. You would have been in long. You've been long on that one. You would be in long on this one, but how much heat do you have to take before you lose? 33 ticks, doable. Actually, that's not too bad. So you would be in right here. So you'd have to, it would trigger right here, and you almost missed it, but you would have gotten it. You would have been in. This one you would have been in. How far did it go? I don't know. 34 ticks. It's certainly been break even. You would have been popped out. You would have been popped out right here. Well, at least using my numbers, you'd be popped out in a reverse, a couple ticks after reversal bars. So you'd get in here, and you'd be out right about here. So that basically didn't do anything. It depends on your, but again, it depends on your management, trade management. This one would be a loser. This one would be a loser because you would have been in, no doubt about it, but it didn't go anywhere. And if you're using 50 ticks. Now the other thing that you could do is what we call getting out gracefully.
Now it's not logicked in here, but it doesn't mean it's not going to be. And what we mean by that is that getting out gracefully is that conditions change.
So because of conditions changed, and we could put the warnings on here, and I'll show you. So even though we're only, let's use this one, group 3. So let's turn this off, turn this on, go to our plots, group 3. I want a warning, reversal warning right there. Okay.
So when you see the warning, and this could be programmed in, it's not, I mean, it's not, I don't have it written up yet, but it could be. If you have a reversal warning, it will just, in the opposite direction, of course, like right here, it will just do a couple things. If you're in a trade, it can get you out gracefully. If you're out of a trade, or if you're not in a trade, it will stop it. It says no more, don't do it. So in this case, you get get rid of that. You get the warning right here. So now you're in short. You get a warning, and now it's going to say at the pullback, get me out, which you would probably be out right here. Let's say there's a pullback. If you use that one as an example, I'm trying to use that. So you'd probably be out right there. So come on. So you would have lost 20 ticks on that one. But it's, again, logic is not incorporated in there yet.
So as things, that's why I like these warnings, because as things change, you could say, ooh, I don't want all this get in anyway. You could just say, if you're in a trade,
you can manage it yourself manually. you say, oh, it's just not worth it. Let's just tighten it up. Let's wait for the pullback and get me out. So let me put my stop right there to pullback. Boom, it stopped you out, and that's it.
But that's something you have to make a decision on the fly because that's not in there yet. Anyway, this is what I got to do. This is where the beta testers come in, and this is what makes team and anybody who's interested in doing this and spending lots of time on this, then I have no problem with sharing.
But it does take time. Now, if you want somebody else to do it for you, then I'm doing this for me. I've been doing this for so long, and I'm so tired of constantly staring at a screen and for every single trade, constantly measuring, looking what's changed. There's just too much. With the computer, it says, hey, is it true, 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 true? And that's the last one's true. Go. Simple as that. Do it. And the way I have this designed is that I could change these settings because there's so many settings to be changed. And my next thing I've talked about was called AI. And it's really technically not AI. I'm just calling it AI, but it's just logic that if conditions change, if volume is this, if the range has not gone anywhere, hold on, my son's calling. Hold on. Okay, I got to close this video off anyway. I got to get going. Anyway, if the reason why I did this is so that things could be changed. So the AI would say, hey, wait a minute, the range in the last X trades have only been 20 ticks. So therefore, our target shouldn't be 50. The last X trades, our heat that we had to take, our MFE, it's all measured. Our MAE has been 50 ticks. So, we got to do this or do that, whatever. And it will just do the logic. We have to put the logic in place. But once the logic's in place, do this if that happens, then there's your AI. So I guess you can call it AI, but it's just predetermined logic. You just need to tell it what to do. That's all. So anyway, this is where I'm at. This is what it takes. If you're interested in getting on, this is what we need to do. And we need to share numbers. And once we get numbers, we can go online together on Zoom, or you just give me the template, whatever. We can work on it together as a team and, look at the numbers and say, how do we tweak it even better yet? Or what do we need? We might need a new indicator. Hey, throw the Bollinger Bands in there. If we need a Keltner channel, whatever. Throw whatever we need to do it. Volume. That's the one I'm looking at right now, this volume sliver. I'm possibly adding that along with the Mantic market. But this is what it takes. So if you're looking for a quick fix template, once I get it, it won't be free. So that's all I can tell you. All right. That's all I got. Thank you very much.